Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about an investment opportunity that you need to at least put on your watch list, and that's Generac. Generac, ticker symbol GNRC, they create and manufacture generators and generator type equipment. So far, you can see the stock has gone from 520, today's price of 110. Now we look at the all-time chart, click on the logarithmic chart, which is simply just return on percentages, not necessarily price. Zoom out a lot. I guess we could just do this. Zoom out. And you can see IPO back in 2010 for $9 a share, hit $62 back in 2014, took 5 years to recover, right, from 62. Went from 62 to 28, back to 62. Then COVID came along when it was 117, fell to 78, hit 520, now down to 110. In the meantime, the earnings have been growing like crazy. We can see back in 2015, 92 cents a share, okay, 82 cents a share, 93, $1.11. 142. Now they're growing. 143, 153. COVID comes along, takes it to down to 87, right, in another quarter. 140. So a huge surprise. So this is the quarter after, in between here, where COVID is really affecting people. $1.40. Then it really takes off. Then you have 208, 212, 238, 239, 235. Then we have 251, 209, 299, and then today was a terrible earnings report, $1.75. $1.75 compared to the estimated $3.22 a share. On revenue, they also just reported 1.09 billion compared to 1.336 billion, which they were supposed to or estimated to report. All right, basically the stock has obviously had some damage done to it. You can see from $500 down to 110. But I don't think this stock has much more to fall in order to stop falling, right? You can see the COVID high was 117, 118. We're below that now. COVID low was 76. If we could hit that, that'd be fantastic. Obviously, I'm not a shareholder because that would not be fantastic if I was. But possibly, if it falls enough, I may be interested. So let's look into Generac, right? This is macrotrends.net. This shows us the actual earnings over time, and this is years, right? So you see $7. Of course, you're like, wait, what? I just saw $1.75. $7. It's past 4 quarters, and you can see the past 2 quarters have not been very good compared to the rest, right? Past 3 before that. Look at the all-time chart. Well, they lost money in the beginning. Now they're making money, right? They're making a lot of money, $7 a share, and that's kind of slowing down. You can see it's just the COVID effect is kind of dying on Generac. Then we go to FinViz, right? We look at the basic financial data, valuation, stuff like that. Of course, we see a market cap 7.53 billion, income of 500 million, sales of 4.4 billion, right? We saw $1 billion revenue this quarter, so times 4 you get 4.4. So the other quarters have a little bit more. Book per share 38. That's the book value. Right now it's 110, so not really comparable. About 3. You can see at 2.9. Cash per share $6.84. Not very much cash. Almost 9,000 employees. It's recommended. It has a PE of 14, which means price over earnings. So you'll have the price of $110, earnings of $7 a share. You're looking at the EPS 775, and you get that beautiful number of 14.24. Now you have the forward PE, which is simply take this over this, 110 over 13, and you get 8.26. And 8.26 PE ratio is very, very low. That's very, very attractive if you're an investor. Hopefully you are watching this video. PEG is simply the price and earnings, so this number over the growth. right? And you can see the growth numbers right here. 5-year, 40%. Next 5 years, past 5 years, it should be this one. But every site calculates PEG different. But anyways, a PEG of 1.06 is fantastic. Anything under a 1 is amazing. With Generac being such a high growth company, you can see all that high growth right there. It's a steal, right? For a PEG of 1.06. Price sales 170, price book 2.9. Not whatever. It's whatever, right? Those don't really matter in the grand scheme of things. These matter much more. Price to free cash flow is very high, which means they have to get their free cash flow under control. That's something to be aware of. They have a good amount of cash, right? $6 a share, but they have some debt, not a lot, but it's manageable, right? You can see debt to equity is 0.57, which means they have 0.57 out of 1 more debt than equity. If it's over 1, then they have more debt than equity, but if it's under 1, then they have more equity than debt, but not by much. EPS, you can see all the EPS growth looking beautiful. Of course, the past that has treated Generac pretty rough. You can see that here, down 76% in the last year, 68% down year to date. This week down 26%, just because today is down 25%. Target price at 325. That's a triple from here. Who knows? That's probably not with the current market in mind. But anyways, guys, with the RSI of 22, and we're talking earnings growth beyond comparable, with a low valuation and an up-and-coming company, Generac. I've seen Generac generators on the side of buildings. They look nice. I don't know how they are used, right? I've never personally used one. However, we do have some equipment that we use in terms of like a backpack leaf blower. That's a Generac tool that we have. Specialty industrial machinery. I'd say that holds pretty well. Mostly generators, but a lot of that small equipment that you use, like cut down trees, blow some leaves, stuff like that. So I do think this company has a lot of potential. However, the price does scare me a little bit. With RSI of 22, it does look attractive, but then again, we do have some more room to fall in order to hit this 76, 77 support, and I'd love to buy at that price. I really would. So who knows? Generac keeps falling more. I may be interested, but right now it seems like a little too big of a risk compared to the rest of the market, and no real direction. Are we going up? Are we going back down? Right, that's the hard part. So I'm staying on the sidelines for now. Let me know what you think. It's a very attractive company at a very attractive price after today. I just got to wait a little bit longer in order to mitigate some risk. Let me know what you think in the comments. Thank you for watching.